Nvidia drags on sentiment. Could Trump drag on the economy? Welcome to Market Insight. I'm David Pollard. AI heavyweight Nvidia's revenue forecast initially failed to impress investors. Could it now take the edge off this year's massive surge in the S&P 500, especially with what our guest today sees as a heightened chance of a US recession? Well, Brian Krawez is President and Portfolio Manager at Scharf Investments. Welcome, Brian. Let's look at Nvidia first. Are there signs that the mania around this stock is beginning to fade, and where does it leave the other big players in the chip sector?
Yeah, well, clearly Nvidia's quarter, as expected, was very good. It was actually, better than expectations. Phenomenal growth. I think the issue with Nvidia is the price is already, accounting for a lot of good growth coming forward, and so investors are a little bit concerned that the guidance wasn't ahead of where people were expecting. Honestly, it's fantastic growth, but the problem for them is there's a lot of competition coming, and maybe investors are starting to get a little worried about that. For us, we think there's cheaper plays that are not directly benefiting as much, such as a Samsung, which is trading around book value. But we think that the larger story within tech has been really overhyped in terms of valuations, and so investors should be a little bit cautious.
Retail has been another big theme this week, with Target shares shedding a fifth of their value on a dour holiday forecast, but Walmart shares touching a record high, prompting thoughts that not even the prospect of Trump's China tariffs are shaking consumer appetite. Or do you think that might be a false reading?
I mean, I think the consumer is in decent shape, as you saw from Walmart, but Target had some warning signs. The other thing is, if you look at credit, there's starting to be some warning signs there with delinquency starting to rise across the board. So clearly, there's a little bit of troubling signs on the horizon. In terms of Trump, we'll have to wait and see. I think most consumers are not really factoring in tariffs yet, and we really don't know what's going to happen. But clearly, tariffs would be a big problem for many retailers, and so investors should be somewhat cautious and keeping that in mind as we go forward.
Well, let's look at that a little bit more. How badly could Trump's China tariffs hit retail and indeed other sectors? And is that only one risk adding to your thoughts around the likelihood of a recession in the US?
Yeah, I mean, Trump's tariffs would be highly inflationary if he were to do, some of the things he's saying to do, like 1,000% tariffs or something on China. Obviously that would push up prices across the board on many imported goods, and that would just directly impact the spending power of consumers and would dampen consumer spending. So obviously, Trump tariffs could be a big problem. But in addition, you've got tax cuts expiring. The new Congress is going to have to figure out what to do with that. You've got huge deficits, and we've got to figure out how to deal with that at the same time that we've got rising entitlements that are a large part of the budget. So ultimately, there's a lot of issues here. The S&P 500 is trading at very high levels of 22 and a half times next year's earnings. And so investors are not really factoring all this in. And then on top of that, we throw in very heightened geopolitical risks when you've got wars going on in the Middle East and in the Ukraine. So these are all a number of factors that could potentially still lead to a recession as we head into 2025.
So given all those factors, what do you think the outlook is for the big share markets on Wall Street? And how do you think investors should play them at the moment?
Well, we think risks are high of a recession, but there's still a lot of good quality companies that are trading at reasonable valuations that should do well regardless. And then there's also the beneficiaries. I mean, for example, we think Lockheed is still reasonably priced, and that's a beneficiary from what's going on geopolitically around the world. We think energy is pretty cheap. If you look at Occidental Petroleum, they've got a lot of energy that's in the U.S. domestic shale. You've got a name like Schlumberger that's going to benefit from increased drilling if the Trump presidency actually loosens regulations in the U.S. And a company like Schlumberger is trading at 12 times earnings when it's typically trades at more like 2022. So while the market may be expensive and while there may be some recession risks, we still think there's ways investors can be more cautious and invested and still participate in potential upside.
Okay, Brian Krawez of Scharf Investments. It's been great to hear your thoughts today. Many thanks for being with us. That is your market insight. You can watch more videos on Reuters.com.